Delivery percentage is the topic of this video, and in this video I'm going to walk you through the facts and the myths about how to use this important information which the market throws to us every day. The percentage of volumes traded every day, how much of this percentage has been taken back as delivery. Keep watching. All right. So what is this delivery percentage and how can one make use of it? As always, I'm using the Iris Plus software provided by the Spider software. And let me first quickly open up a chart. This is a daily chart and I'm going to use the chart of Tata Sponge. Whatever, I can use a better Tata stock than that. When I say better, I mean more liquid. So I go to Tata Steel. And in this software, we can plot it visually, delivery percentage. And let's see how does it look first, okay? So percentage, yes or no? Yes, I would like to have it in percentage. So I say Y, yes. And let's give it a slightly different color and let's say brown, so be it, and add. And I see over here on my right hand side that every day it gives me a value which is around 28, 24, 25, etc. etc. So these are the percentage. Means on the last trading day, if Tata Steel traded around 0.67 crore, like 67 lakh shares got exchanged on the last trading day, out of this 67 lakh shares, 28% of these 67 lakh shares were taken back home in your depository account, means taken delivery. Rest of it, what happened to that was more of an intraday volume, means people bought and sold on an intraday basis and they squared off their position before the market ended at 3:30. So of course, logically, if this delivery percentage number is on a higher side, then it means that a larger amount or a larger portion of the traded volumes have been delivered, taken back home, and it means that probably and surely those who have taken it back home would have a slightly larger perspective and they would expect that in a slightly larger time frame the stock is going to appreciate and go further up. So logically, a higher delivery percentage number implies to bullishness or immediate, if not eventual, bullishness in the price of the stock. Is that a fact or is that a myth? Well, logically it sounds good, but if you test it out visually first, you would realize that that may not be the case all the time. And I think we have an example right here. When we see that on a particular day, which was the 21st of November 2018, Tata Steel had a decently high delivery percentage of around 50%. And the stock tanked. The stock kept on coming down for the next 3 days and furthermore. So it's not always the case that a higher delivery percentage means immediate or eventual bullishness to the price of the stock. So how should we read this and what does it mean and why does it fail? Well, delivery percentage is a very relative term. So 24% is high or low, 51% is that high or low? How do we know that? There are few thumb rules like use 75%, 70% or 80%, and if it is more than 75% or 80%, it means that delivery percentage is actually really on the higher side. But that need not or that may not be the case with thinly liquid or thinly traded stocks like, let's say, MRF or a Britannia, or purely something like an expensive stock like a Page Industries, etc. So what should we do? Now, what I would like to do is to see the delivery percentage moving away significantly from its mean, from its average, from its natural normal tendency. And to do that, nothing better than putting a standard deviation, or we would use a Bollinger band. So I come to Bollinger band and I stick to the 20 period because delivery percentage is a number we get on a daily basis and we have around 20 to 22 trading days in a month. So I'll keep the default 20 days, standard deviation 2, the close to that 95% is fine. And I'm going to give it a different color to the upper and lower Bollinger band and make it a little thicker. And say I plot it on the delivery percentage and I take the input as delivery percentage. So what I've done down here, I've plotted a standard deviation, a Bollinger band, on the delivery percentage itself. How does it help me? Well, the way it helps me is, this is the average, the mean. When it's above the mean, of course, it's on the higher side. But when it breaches the upper Bollinger band, this is an exceptional move, right? This is an exceptional move. This, when I mean exceptional move, I mean exceptional move from the people who have traded into the stock that day, and majority of it has been taken back home. So in this, on this day, that was the 21st of August, delivery percentage, let me just zoom it back so that I can see the numbers. You can see here that on this day, delivery percentage was around 36%, but it was above the Bollinger Band high. On this day, it was 51%, that too also above the Bollinger Band high. Now, none of these days did lead to any form of further rally. On the contrary, it led prices to come down. If I scroll back further, down back in history, I realize there's one day which comes on 26th of July and I see 35% delivery volume. And in this case, I see that the markets actually rally after this. So what's happening? If you think from an institutional perspective, an institution or a group of people who are quote unquote smarter than the rest of the market would like to buy it cheap, okay, when the markets are coming down, when prices are falling. So I would always prefer to find a combination where the stocks have come off, it's been a downtrend, absolute volumes have been exceptionally high. So by exceptionally high, we can quickly plot an average. Let's put a simple 21-day average, and you can plot it on the volume. Take the input as the volume. So what we have done is we have plotted an average 20 period monthly average on the volume. So these kind of days where your histograms, your volume histograms are significantly higher than the average means on this day, particularly high volume day. But high volume does not necessarily mean that it's going to give that thrust, the push to the uptrend or the downtrend. Theoretically, when you read basic books on technicals, you come across this, that higher the volumes, better the move. Need not be the case when you actually implement in the practical world. Higher the volumes can mean, and when you combine it with delivery percentage, you see 11% delivery percentage. So the rest of it is all speculation. So pure, simple, only absolute volumes may not always give you the clear, true picture. But when you combine it with delivery percentage, and when you see whether this percentage value is significantly higher than the mean or exceptionally it has hit the upper Bollinger band, then it might give you some more extra information. And in trading, information is very, very useful. So in this fall, I see significantly there's been a rise in volume, but I don't see exceptional delivery percentage coming in. It's actually later that the delivery percentage picks up. So it's not that all the time you're going to get a good fit, but when you get a good fit, it gives you a sense that I might have something in my hand, maybe something like this. The markets have been coming off for 5-6 days, volumes have inched significantly higher, and I see the delivery percentage, which was down to the sub 20 levels, have all of a sudden picked up to around 33%. 33% is definitely greater than the mean. If it had been closer to the upper Bollinger band, means really, really high delivery percentages. This is the kind of days where we get to see panic sell-offs. Means the markets come off so sharply that the last buyer has also decided to exit the stock. So if you want to think from the perspective of an institution, let's say we have one more example somewhere here. High volumes, markets have been in a downtrend, spike in delivery percentage over here, and not only does it spike up, it goes up close to it and it hits above the upper Bollinger band. So together, price trend, absolute volumes above or below the monthly average level, and when you combine it with that of the delivery percentage, it should be rising. And if it is more than the average, it's better. It should be more than the average. And if it's close to the upper Bollinger Band, it means you have a significantly high delivery percentage. Now, traps also happen in the market at the top when everyone is bullish in a stock. In that kind of a scenario also, the last buyer comes in. He's been waiting all throughout and the trend keeps on going up, but finally he decides, no, this is the time I'm going to buy. And even in those kind of markets, when it's an extended uptrend, if you see exceptional high volumes and if you see exceptionally high delivery percentage also, please consider it with a pinch of salt, because that may be a bull trap. High possibility that the last buyers are getting into the market, and this may lead to a top, and the institutions or the smart money might be using this opportunity to just simply get out of the market. Now, in this software, on a day-on-day basis, it helps us to understand which are the stocks which have a high delivery percentage. So I come to reports, I drop down all the way down here to delivery volume report, and what do we have here? Quantity, so let's say 5 lakhs. So we're going to have to look at stocks where quantity is greater than 5 lakhs. NAC, let's choose a group, and let's say we select Nifty 200, and delivery percentage between 0 to let's say 75%. Process, and there you go. Within the Nifty 200, we have for the last 10 trading days, and if you can sort them, the last day, we have a Godrej Consumer which had a 74% delivery on the last trading session. Petronet has a 74%. Okay, between, I'm very sorry. So let's say 75 to 100. I'm very sorry. Process. So we have two stocks, AU Bank and Crompton, where we have 84 and 79%. Just to get a slightly longer list, let me make it 70%. That's better. And let's sort it out. AU Bank, Crompton, Godrej CP, Petronet, Indian Hotel, and HDFC. So what we have are around 6 names. Delivery percentage is greater than 70%. Now what you can do is you can now check. So I can check HDFC, delivery percentage is HDFC, delivery percentage over here is essentially, it's coming off. It's not shooting up that much, though the number is on the higher side. Over here I see Indian Hotel, the delivery percentage is 72%. It's coming off. It's at the average. Volumes are not that great. I'm not interested. Petronet, volumes are not that great. It's in an uptrend. It's been moving up. It's close to resistance. Not interested. Godrej CP, now this might look a little bit more interesting than the previous 3. Volumes are greater than the average. Delivery percentage is moving up. It is close to the upper Bollinger Band. Recently, we had seen spikes of this percentage going up. We had one day over here, which was a high volume sell-off. Overall, is this a stock which is bottoming out? That's exactly the information what the delivery percentage can give you. The delivery percentage, higher number with higher volumes, does not tell you to exactly pinpoint the price or the day above which you buy with a stop loss. It just gives you a scenario, a condition where you try to understand, yes, Godrej CP or Crompton or AU Bank, they are coming off, but people are getting more interested in the stock to buy into them because it's getting relatively cheaper. Same goes with AU Bank as well. It's range bound, it's in a downtrend, volumes are higher, delivery percentage is greater. Now this does not mean tomorrow you buy above the high of the bar, keeping low as a stop loss or anything like that. What this means is probably there's some amount of accumulation happening in AU Bank, probably. Should I look to buy or sell or use a stop loss, etc., should come from other indicators like your price or your RSI or something else. Delivery percentage overall just gives you a scenario of a probable bullishness coming up in the future, but you have to time your entry and exits not using this indicator but something else, preferably a price-based one. I hope this video was useful for you. Whenever going forward you look at any video or any news or any app or any website which throws at you higher delivery percentage in this particular stock, please consider looking at it very closely in terms of the trend, the absolute value, and then the delivery percentage. I hope this video was useful for you for your trading decisions. Till then, trade well, trade wise.